If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
Did you know that in less than 90 days, I was able to attract and raise $2,150,000 in new private money funding? And you know what? I didn't ask anybody for money. And people ask me all the time, they say, Jay, how in the world do you raise millions of private money and you never ask anybody for money? Well, here's the secret sauce, and then I'm going to turn it back over to you all.
You've ever wondered how to raise capital? Today's guest is an expert in that field.
Plus, make sure to stay right till the end because he's going to give you a copy of his free book. I'm Mel.
I'm Dave.
And we're the Investor Couple.
Very excited about today's episode. We've got a guest, Jay Conner. Today, Jay's going to be talking about the secret sauce to raising capital. He's going to talk about how he structures the deal for security-wise. And then number 3, he's going to talk about how to raise money without even asking for money.
And if you don't know who we are yet, Dave and I have purchased over 250 units using creative financing and without joint venture partners. And we're investing in 5 countries: Canada, US, Mexico, Dominican Republic, and Costa Rica.
And if you're new to our channel, make sure to subscribe and hit the bell to get notified. We release a video every single week.
Make sure to stay right till the end because you don't want to miss out on so many great tips that Jay's going to be sharing. Let's get started.
All right, so we wanted to welcome our guest today, Jay Conner, known as the private money guy, which we happen to be in masterminds together. We've had the pleasure of meeting in Tampa in September. So yeah, Jay, welcome to our show. Welcome to our audience.
Happy to have you here today. I know you're going to provide so much value to everybody.
Dave and Mel, I'm so excited to be here on your show, and that's because we're going to be talking about my favorite subject in real estate investing, which is private money. And why is it my favorite subject? Because private money's had more of an impact on our real estate investing business than any other strategy that we've ever done.
I agree. Private money has been a game changer in our portfolio, and by the sounds of it, your portfolio and the people that you help. So couldn't agree with you more, Jay. That's a great way to open up the conversation. But yeah, tell us more, tell our audience so they get to know you a little bit more. But who is Jay Conner?
Right. Well, my wife, her name's Carol Joy. She's originally from Texas. We live here in eastern North Carolina, which is my hometown where I grew up. We're in a really, really small town. It's called Morehead City, North Carolina. And Morehead City's only got 8,000 people in it. Our total target market, and we've been full-time in real estate investing since 2003, but our total target market is only 40,000 people here in eastern North Carolina, which is a really, really small market. Now, we do 2 to 3 deals a month. In this market, we're flipping most of them. Our average profit right now per transaction is $82,000 per house, per deal we're doing. And I don't say that to brag at all. I say that to make a point. And that is, you don't have to be in a big market to really make significant income. And if you can make $82,000 a deal, you don't need to do that many deals, you know.
Well, you just got all the audiences tuned in, listening to you saying, wow, that's amazing. I'm excited. I'm living in a small market. Our one investment returns are best. So, I mean, that's not little money. That's life-changing, right? Once you
Sure, absolutely. And I mean, there's a strong argument to be made to invest in the outlying areas, not in like the middle of the big city where you've got all that competition. So, you know, for like in our circumstance, we are a big fish in a very, very small pond. Not many other, you know, full-time real estate investors that I even know of here in the area. But my background as to how we got involved with private money, the first 6 years that we were investing here, and this is where we've been investing all these years, from 2003 until 2009, January 2009 to be exact, I relied on the local banks to fund my deals. I never heard of your expertise back then, those first 6 years of creative financing and subject to and seller financing. And I never heard of wholesaling. I never heard of private money. I had never heard of self-directed IRAs and how people can take their retirement funds and actually be a passive real estate investor and be a private lender to us real estate investors. I hadn't heard of any of that. All I knew to do was to go to the local bank, get on my hands and knees and put my hands underneath my chin and say, please fund my deal. Please fund my deal. And, give my tax returns and verification of income and W-2s and all that jazz. So January 2009, everything changed like immediately. Now, where you all live, you may not have any longer what these things we call handsets with cords attached to them. That's you have cell phones, right? Well, we actually still have landlines here in North Carolina. Anyway, I was sitting here at my desk, January 2009, and I called up my banker. His name was Steve, and Steve had funded a lot of my deals. I mean, all of my deals, to tell you the truth, from 2003 to 2009. Well, I had 2 houses under contract in January 2009. I called up Steve. We had a little chit chat. I told him about the 2 properties. They represented over $100,000 in profit just between those 2 deals. And I told him the funding required for the deals. Well, I learned like that over the telephone that my line of credit had been shut down, no notice. And, my first thought was, I wish somebody had told me, like Steve at the bank, that my line of credit had been shut down anyway. So I said, Steve, what do you mean my line of credit's been shut down? I got a great credit score. We've done a ton of deals in 6 years. Why is my line of credit closed with no notice? He said, Jay, don't you know there's a global financial crisis going on right now? I said, no, but now you just gave me a global financial crisis because now I can't fund these 2 deals and I was relying on you to fund them. He says, well, sorry, we're not loaning out money to real estate investors. So I hung up the phone and I asked myself a very, very important question. I asked myself, I said, Jay, who do you know that can help you with your problem? And by the way, these people running around saying every problem's an opportunity. I want to throw up. I didn't have an opportunity. I had a problem. I didn't have a way to fund my deal, right? Yeah. So immediately when I asked myself that question, I thought of Jeff Blankenship, who lived in Greensboro, North Carolina at the time, good friend of ours through church, through singing events and stuff. And I called him up and I told him what had happened. He said, well, welcome to the club. I said, what club? He said, the club of being shut down at the bank. They shut me down last week. I said, well, how are you going to fund your deals? And he says, well, have you heard of private money? I said, no. He said, have you heard of self-directed IRAs and how people can use retirement funds to lend money out as a private lender to real estate investors, either tax deferred or tax free? I said, for goodness sakes, no. So I hung on the phone with Jeff and I studied private money. Now, by the way, let's be clear. I'm not talking hard money. By the way, I got some great friends, and you all do too, that are hard money lenders. But I'm not talking hard money in this conversation. I'm talking about borrowing money from individuals just like you and me from either their investment capital or their retirement funds. So I put my private money program together. What's my private money program? It's like, what am I going to offer individuals, potential private lenders, to be a private lender with us? And so I put my program together. What interest rate am I going to offer? What's my terms going to be? Frequency of payments, etc. So I put that together. I learned about self-directed IRAs. I established a relationship with a self-directed IRA company that when people have retirement funds, I could refer them to them. So here's what I did. Did you know that in less than 90 days, I was able to attract and raise $2,150,000 in new private money funding? And you know what? Here's what's really interesting about it. I didn't ask anybody for money. In fact, since I started raising private money, I've never asked anybody for money. We got 47 private lenders right now that are funding our deals, and we'll have a bunch of projects going on. And people ask me all the time, they say, Jay, how in the world do you raise millions of private money and you never ask anybody for money? Well, here's the secret sauce, and then I'm going to turn it back over to you all.
Hey, stop the video for a second. I wanted to talk to you about a turnkey income property provider that Mel and I have purchased properties for. Now listen up. If you are looking for a income property, then you don't have the time for it. I have a solution for you that I have invested in myself. They will find the property for you, they will renovate it for you, they will give you a turnkey product, and they will get tenants in there for you after screening it and manage the property. Does this sound too good to be true? It is not. Click the link below, go check out this exclusive list, find your next turnkey income property, and book your free call with them so they can go through all the benefits of what they provide. And you'll be investing in properties just like Mel and I. Okay, enough excitement about this. Let's get back to the episode.
The first thing I did was put on my teacher hat. My teacher hat, which says private money teacher. And so I didn't pitch any deals. In fact, I've never pitched a deal in all these years. So what did I do first? And here's the secret. I separate the conversation of teaching the private lending program and how people can earn high rates of return safely and securely and the kind of returns they're going to get. I separate that conversation with offering them any kind of a deal to fund, because desperation's got a smell to it. Yeah. And if I'm talking about a deal and my private lending program, what I'm going to offer, I already sound desperate and I'm not even trying to. So first I teach the program. I'll do that at a private lender luncheon and have 15 or 20 people there, or just one-on-one. And I don't have to ask them. They tell me how much they've got at the end of that conversation. If it's an investment capital, is it retirement funds, etc. And I say, well, hey, I've got X number of dollars I'd like for you to put to work. I said, okay, I will give you a call probably within the next couple of weeks, at the most 30 days, and I'll have a deal for you to fund and I'll put your money to work. So we end that conversation. Now, the second part of that is I call them up with what I call the good news phone call. So I call them up and let's say, oh shoot, Mel, let's say you're one of my new private lenders, and let's say you have said, I've got $150,000 that you'd like to get those kind of returns on. So I'll call you up. We'll have a little chit chat. And I'll say, Mel, I've got good news for you. I can now put your $150,000 to work. I've got a house in Newport under contract with an after repaired value of $200,000. The funding required is $150,000. And closing is going to be next Wednesday. So you'll need to have your funds wired to my real estate attorney by next Tuesday. I want to have my attorney email you the wiring instructions. End of conversation. Notice I did not ask you if you wanted to fund the deal. Of course you wanted to fund the deal. You've been waiting for the good news phone call. And particularly if you have moved your retirement funds or a portion of them over to a self-directed IRA, you're not making any money on that money. And I'm ethically bound to put your money to work because you moved it over to a self-directed IRA company that I recommended you move it to. So again, it's all about leading with a servant's heart. It's all about educating. We're not selling, persuading, chasing, or trying to talk anybody into anything. Instead of asking for a mortgage or mortgages, we're offering mortgages.
Jay, that is refreshing. I love how you're doing it. I love the good news phone call. I love the secret sauce. Our listeners are probably loving it. Well, I'm not probably. They are loving it as well, because that's why they're following us as creative financing and real estate. Two things that you said that really resonated to me was, welcome to the bank said no club. When you get into that club, not by choice, right? Whenever you're kind of put into that club, at first it's what do you mean you don't want to finance me? Great credit score, great history, great total debt service rate, No, you've hit your credit limit at the financial institution. You're now kind of a burden and a risk from the risk assessment team. And same with us. We were pushed into creative financing.
Who knew, Jay? We were in the same club.
No,
we're not
same
even
club.
in the
I love
same
it.
mastermind together and friends. Now we're at this club together too, right?
Well, I'm glad we've got I'm glad we got some war stories we can share.
Yes,
exactly. And I love what you say. And just mindset, guys, around all of this. If you're thinking, well, Jay, that might sound easy for you, and Melanie, that might sound easy for you. It's all how you look at things. And even in the beginning, we took the same approach as what Jay is saying is, you're not necessarily pitching, you're not having that desperation, you're planting the seed, and then if someone moves the money over, they're very serious. And then when you call them back with the deal, and if you have a solid deal, like Jay was just saying, had the solid deal, had the after repair value, it becomes a no-brainer for them. So I love how you're doing things, Jay.
And I'd love to tap into that a little bit more, because I know sometimes, that's the fear, of course. If ever you're going to lend out somebody's money, that was definitely my fear when borrowing money. I need to make sure I have my exit strategy, never touch a penny ever, unless you know exactly how you're going to be paying it back and don't over leverage and all those kind of things. But how do you, somebody says, okay, I have $100,000 to invest with you, but I have fear, you have a deal, but I don't fully, I guess, how do you go upon making sure that how to of course ensure that you can pay them back?
Sure. Well, if a potential lender, and by the way, all 47 of these private lenders that we have today, not one of them had ever heard about private money. Not one of them had ever heard of self-directed IRAs. And by the way, over 50% of our private lenders are using their retirement funds. So here's an actionable item for those of you that are listening to this show, and that is you want to establish a relationship with a self-directed IRA company so that you can refer your new private lenders to them, or they're not going to be able to loan their retirement funds out to you. But as far as reducing the fear or nervousness or whatever of a new private lender moving forward, all that is fixed in the program that we share. So it really comes down to the question is, how are the private lenders protected, right? So I'll first start answering the question with sharing a question that I hear from new real estate investors a lot. And that is, they'll say, who's going to loan me money when, they say, I got a fear of asking for money. Well, the answer to that statement is, how can you fear rejection when you're not asking anybody for anything? I'm not asking anybody for anything. I'm educating, I'm teaching people what this program is, what this opportunity is, right? So I'm just sharing. As far as reducing the fear of a lender, it comes down to, as I said, it's how we're protecting them. So how do we protect our private lenders? Well, first of all, we don't borrow any unsecured funds. You can legally borrow unsecured funds. You can give a promissory note or you can shake hands, but for goodness sakes, don't do that, right? You want to protect your private lenders. We give them, in North Carolina, it's called a deed of trust. Most people call it a mortgage. So all of their funds that they're loaning to us is backed by the real estate that we are purchasing. Now, private money can also be used for refinancing. It doesn't have to be used for purchasing. You can have equity in some properties and you can pull some cash out of it by using private money. But anyway, so number one, we're going to secure them with a mortgage. Number two, in addition to that, we're going to make it conservative. Loan to value. So we're not going to borrow more than 75% of the after repaired value. Notice I didn't say 75% of the purchase price, 75% of the after repaired value. And the little example that I gave a minute ago on, I've got a after repaired value of $200,000 on a house in Newport, and the funding required is $150,000. Notice that was 75% of the after repaired value. Just as a side note, we always bring home a big check if there's going to be a rehab or renovation on the property. By the way, private money works for single family houses and commercial, of course. We just structure the notes differently. And are they investing in a fund? Everything I do with single family houses is what's called one-offs. What's a one-off? That means you got a private lender or maybe a couple of private lenders that are funding a single family house, and they each have their own promissory note, their own deed of trust. So back to how they're protected. They're getting a mortgage. We're not going to borrow more than 75% of the after repaired value. In addition to that, we are going to name them on the insurance policy, the property and casualty insurance policy, as the mortgagee. So just like borrowing money from a bank, if you borrow money from a bank and get a mortgage, well, that bank's going to be named on the insurance policy as the mortgagee, which means if there's ever a claim against that insurance policy, then the lender, the private lender or the bank, that check's going to be made payable to them and to your entity. So they got to sign off on it, right? So that gives them another layer of protection. We also name our lenders on the title policy as an additional insured in case there's any title issues, down the road. So here's the bottom line. If I, the borrower, does not pay the private lender, the property does. It's that simple. Now, of course, they don't want the property back. They don't even want you to do a deed in lieu. They don't want to mess with it. That's why they want to be a private lender. They want to be a passive investor. and not have to mess with all that. But that is their recourse. That's their protection. And of course, with the way we do the numbers, they would actually make more money on the resale than the interest that we're going to pay them. But nonetheless, that's how we protect them.
I love that you've got, and you always have to, but I love that you have parameters and you know, we're never going over this, right? We follow a system. We don't deviate. The loan to value, or sorry, the ARV, you put X amount on, you know, put name in the title insurance, you name them in the, so I love that you have all those systems, right? So that before people even ask the question, you say, we do this, this, and this, which gives you security in the asset. I guess one question that I had is, what is the typical turnaround time on that, Jay? Like on, let's say, your typical deal, like that deal that you were mentioning, what would be your turnaround time on that?
Yeah, so we set all the notes up at 2 years, but typically we're not going to be using the money for 2 years on that particular deal. We just do it for 2 years instead of 1 year, so we don't have to do an extension or whatever on the note. One reason that it takes us, well, first let me answer the question, how long? We're doing so many houses simultaneously, and I work with 2 different general contractors, and we have our own crew as well. And so we may have, like right now, we've got 6 properties going simultaneously. And typically when we close on a house or a property, it may sit there for 3 months before the crew actually starts on it. Our average rehab now is running between $40,000 and $60,000. So typically we're going to be in and out in 2 to 3 months, and then we'll put it on the market. So our average turn time right now is about 9 months from the time we buy it, the renovation is completed, landscaping's in. We do a music video on every deal that we're going to list that goes in the multiple listing service.
Oh, yeah?
But the demand is so high around here. We just put a house on the market about 3 weeks ago on a Friday, and by Sunday we had 22 showings. 22 showings, can you believe? But so we're typically in and out within about 9 months right now.
Something you just said, sometimes you might have a property sit for 3 months before the crew can turn around. And this is something, listeners, you're carrying costs. Some people might think, hey, the day I get the property, we're demolishing, we're doing that. That's not the reality of, and you know this better than anyone, Jay, that's not the reality of, you don't get the keys unless you're doing it yourself and you're starting to do some of the demo, and depending on where you're doing it and the building department and that type of thing. But you're being realistic. You're giving yourself, sometimes there might be some carrying costs, some lag time, and I'm sure that's all in your calculations. I also love that you said, Dave, 2-year note, tons of runway. And this is a mistake I see with a lot of people that raise capital. They just want to get the money and they'll say, yes, 6 months, yes, 12 months. And then they don't give themselves enough runway. They have issues and they're going back with their, for lack of better wording, maybe their tail between their legs. I'm like you, I'd rather ask for 2 and it takes me 8 months and I pay everyone back and I never have to do an extension. So we're very parallel in our mindsets and our procedures. I love that you do it that way too.
Absolutely. So I'm getting ready to say something, Dave, and I'm taking a risk. I'm taking a risk when I say this. So if you say what I'm getting ready to say, so my apologies, but I'm going to tell my story anyway.
Yeah,
so let me tell you what drives me crazy. I tell you what just drives me nuts. And I know you've heard it. I know you've heard it over 100 times. And you'll have educators, gurus, teachers that are, teaching real estate investing. And here's what they'll say. They'll say, oh, just get the property under contract. The money will show up. Have you ever heard that?
I have definitely heard that multiple times. Yes.
Yes. Right. And you know what? I want to look up at the clouds and I want to say, where is the money going to show up? Right? Where's it going to show up? Where you go? Listen, I have never put a house under contract or a property under contract that I didn't know where the money was coming from. Talking about stressing, look, the worst time to ever be raising private money or attracting private money is when you need it for a deal, right? And just think about how much more confident that you will be, and I'm speaking to the audience, Dave. Think about how more confident real estate investors are on making offers when you know you've got $500,000 or more, or if you're in California, you probably want $1 million. burning a hole in your pocket waiting for you to make an offer. So that's why I practice, and that's why I preach. The money comes first. There's always going to be deals. And of course, you and Mel are experts in the world of creative strategies. I buy a lot of houses subject to as well. So actually, my exit strategy is if I buy it on terms creatively, then I want to sell it creatively, right? I want to stay in that deal typically, unless the profit is like insane. But when I'm buying all cash with private money, I'm typically going to want to cash out instead of, continuing to pay the private money interest and that kind of thing. However, I did it another way for many, many years. I used to rehab all of them using private money, and then I would let the market speak. And this is when the market was slower back when. I put it in the multiple listing service, but I might also sell it on rent to own. But anyway, that's my general rule of thumb now. Pay with cash, private money, cash out, buy with terms, sell on terms. But anyway, I don't know how I got off on that.
No, and I love that, Jay. And Mel and I, we're the same as well. On some of our deals that we've exited, we're actually holding mortgages, right, for them. So we went into it with seller financing, we exited with seller financing. And audience, think about this. To reiterate what Jay has just said is, if you can get into a deal with as little of your own money as possible and other people's money, right, done correctly, creative financing, your return on investment becomes infinite, right? If the asset continues to cash flow, if you're doing long-term buy and hold, or if you're flipping it like Jay was mentioning, if you continue to hold the asset and you continue to make interest on that, like you keep making money off that same deal. Like the deal just keeps pumping out money. So I love that, Jay, you're open to that as well. And something you had mentioned about, we're so parallel in so many ways. I agree with you on, I see some people, they get a deal under contract, they're scrambling for money. Sometimes they even go firm and they don't even know where the money's coming from. We're like, oh my gosh, don't do that. So we're continuously raising capital as well. And I find that confidence comes. So, hey, if I've got 5 different lenders that I'm speaking to and I've got a particular property, it's going to be, hey, who wants that at first type thing. It's not the other way around of getting a deal and then hopefully not firming up and then trying to find money. So I 100% agree with you.
Absolutely. And by the way, let me go ahead and share a tip. One of the easiest ways to raise even more private money is when you are cashing out or selling a property and paying off one of your private lenders that had loaned. Just a couple of weeks ago, we sold this property, and one of my private lenders, her name is Terry. And of course, I informed Terry that we were cashing out. So she only had $30,000 in second position on this house we were cashing out. That $30,000 we had used towards rehab, right, of the property. So I called her up. I said, well, look, we're cashing out. By the way, as a side note, we'll do a lot of substitutions of collateral or loan modifications where the private lender wants to keep that smaller amount of money invested. And so if we're starting another project, we may keep the note in play, but just substitute the collateral of that note without paying them off. Anyway, that's beside the point. So I call up Terry, I tell her I'm cashing out, and here's the question. Easy way to raise more private money just by asking a simple question. And here's what I said to Terry. I said, we're paying off the $30,000. And I said, by the way, would you like to add any more investment capital to the $30,000? And look, I wasn't asking for money for a deal. I just asked her, all framed with, do you want to make more money? Really is what it's coming down to. Would you like to add any more to your $30,000? And she said, well, how much could you use? And I said, well, I've got some private lenders at $30,000 like you. I've got other private lenders that have over $1 million with us and everything in between. She said, well, can I think about it until tomorrow? I said, sure. And so she calls me up the next day and she says, well, how fast do you think you could put $200,000 to invest instead of the 30? And I said, oh, probably within about a month or so. And she said, okay, I'd like to go 200. So that 30,000 with just my one simple question became an additional 170,000 by just asking the question, would you like to add more to your investment capital? So you've already proven yourself. You're paying them off. They're getting their principal back. They know they're not going to make any more money until you get it reinvested for them in a property. And so it's a simple question, very easy to raise. And what had happened is she had a family member that passed away. So she had just recently come into this extra money that I didn't know about. I just asked her if she wanted to add more to her 30,000. So that's a writer downer. Always ask the question, particularly when you're paying off.
Okay, Jay, and audience, take note of that because we've had similar instances. So exactly like Jay is saying, you never know how much money people have in the background. In this particular situation, it was an inheritance, right? No one can foresee that. It could have been this person was maybe trying as a trial run, right? They might say they have 30K, but they've got 200K in their bank account. So we say this all the time with private lenders, no matter what, you might have a certain minimum, but sometimes, again, don't just knock people out of the pool just because they have those smaller amounts because they might have bigger amounts. The same thing I find with our seller financing. We do a deal with someone, they hold a mortgage for us. We pay them back, everything goes well. And next thing you know, hey, I've got 5 properties that I'm looking to do the same thing. So you never know how many or how much money people have and what type of assets they have. So I love that. I love that story, Jay, of hey, 30K went to 200K in a pretty quick instance.
Exactly. Well, Dave, what you just said triggered another truth that I know I never know how much a private lender has, but I do know this. They always have more than they tell you.
Well, 100%. Like, just think, okay, sometimes you're filling out something online or a website and they ask you you never really give your full information, right? You typically, you know what, I'll wait till I'm, more in front of a person. So it's the same thing with private lending. They'll give you a number, but again, I agree with Jay, there's probably some reservation and maybe a little bit more in the background. So I love that tidbit, that nugget of information. This is awesome stuff, Jay, for private money. And people following us and listening to this are definitely interested in that private money realm. So that's cool.
Absolutely. Absolutely. It's my subject that I'm passionate about.
Okay, that's awesome. And when you're passionate about something, it comes easy. And you had mentioned earlier, and this is something I want to talk about. If you're listening to Jay and I and you're thinking, how do I do this? This is hard. We've all been at that instance where now Jay probably has to turn people away. I know sometimes we have to say, hey guys, we have to find the perfect deal before we put your money to work. And this problem, I shouldn't call it a problem, this opportunity, this problem comes to you as you go along your journey. Okay, so just because you don't have a bunch of people looking to invest with you yet, again, I preface the word yet, it will happen one day with consistency and the proper coaching and teaching and knowledge. So this could be you one day saying, I've got a lot of private lenders and I've got to find the perfect deal for them before I can put their money to work. It comes with time. Absolutely.
Well, in fact, right now, I reviewed yesterday morning, I reviewed what's the private money we have available from all our different lenders that are looking for it to be put back to work. And, it's about $1.5 million that's just sitting in their bank account waiting to wire to our real estate attorney's trust account. And so that's something to be aware of. You want to have your marketing machine turned on to where you have consistent seller leads coming into your funnel, coming into your marketing funnel every day, every week. And I tell real estate investors all the time, I say, you know what? If you don't have consistent seller leads, motivated seller leads coming into your pipeline, you do not have a business, you got a hobby. It's got to be consistent.
Like that, words of wisdom. Take that from Jay, right? Been there, done that. I love it. Okay, so Jay, I know we had said in the beginning that you would be giving away your free book to everyone with your
yes.
We thank you so much. Tell us more again. How do
Absolutely. Well, I've reached a point in my life that I'm all about wanting to give back and share what's worked in my world. So I finally wrote my book, which is called Where to Get the Money Now. And by the way, this is not an ebook. You can't download the book. We have to actually mail it to you in the mail. We send it 3-day priority. And so the name of the book is Where to Get the Money Now, subtitle, How and Where to Get All the Money You Would Need for Your Real Estate Deals Without Relying on Traditional or Hard Money Lenders. So in this world, we make the rules. When I was borrowing money from the banks, they made the rules. They set the interest rate. Well, in this book, I've already got laid out for you the exact program that I offer our private lenders. what's the interest rate, how they can get their money back in case of an emergency and they need to call the note due. How's that a work for them? How's that work for you? We've got it all in here. Well, this book is $20 on Amazon, but since you are listening to Dave and Mel, you get the book for free, just covers shipping. So here's the URL to where you can get this book shipped right out to you. I'll autograph it for you and we'll rush it right out to you.
Wow, Jay, that's so amazing. Listeners, guys, definitely get this book. You can't pass this up. Jay, that is so, Mel and I greatly appreciate that. That's so generous of you. I love it. People can take advantage of getting your book for free with paying that. We're going to put it in the show notes as well. So if you're like, oh, I didn't write that down, don't worry. It's going to be below. You guys will be able to click it. If people want to reach out to you, Jay, whether they want to learn your methods, whether they want to lend money to you, like what's the best way for people to get in touch with you?
Sure. Well, when you order the book, you're going to have our office number. You're going to have all of our contact information. If you don't want the book, then of course we've got free resources at just the main website, which is jconner.com.
Oh, that's awesome.
And by the way, this may be a shocker to one or two of your listeners, but when you call our office, we actually pick up the telephone. Can you believe? There's none of this press 1 for this and 2 for this and 3 for that. We actually say, thank you for calling the office of Jay Conner. How can we serve you?
That is extremely rare nowadays, speaking with an actual human and speaking on the actual telephone with them. That's amazing, Jay, that you guys offer that. But Jay, so many nuggets, guys. If you watch this, I think you rewind and watch this again. Jay has dropped so many nuggets today of information and knowledge from experience, years of experience, tons of deals. Raising private money is one of the biggest things we get asked all the time. So if you watch this and you didn't fully grasp everything, this was a really good one. Okay, so go back, watch it again, reach out to Jay, get your free book, get the resources from him, reach out, call him if you want, call his team. But Jay, couldn't thank you enough. Thank you so much for being on our episode and providing so much value to the audience.
Absolutely. Dave, thank you so much. And by the way, here's another way that audience, you can reach out to me and follow me. And that is come check out my podcast, which I know is going to be hard for you to believe. The title of it is Raising Private Money with Jay Conner. And so we do 2 episodes a week. We release them on Monday mornings and Thursday mornings. We're coming up on episode number 700 right now. And we always interview people and ask them how they go about raising private money. And guess what? Dave and Mel are going to be joining me on the podcast. And it's going to be my turn to ask them questions. We're going to talk about how they've raised private money for their deals and how they go about using creative financing. So, Dave, I can't wait to have you and Mel join me on my show.
Yeah, same here, Jay. And I'm sure this isn't the only one we'll do with you. I'm sure we'll have you back over the years. And couldn't be happier to have you on. Couldn't be happier to be in a mastermind with you, Jay. Our pleasure. Thank you so much for coming here today.
Dave, thank you so much, and God bless you. Look forward to seeing you soon.
Wow, what a great episode. I love that Jay was talking about not even having to ask people to raise funds, number one. Number two, the group of banks saying no. If you're starting to invest in real estate or you've been investing for a while, this will be a reality. At some point, the banks are going to say no, and you'll have to go into the creative financing route. But Jay makes it sound so simple and easy. He's been doing it for so long. So yeah, definitely reach out, get his free book. I'm so grateful that he's doing this for our audience, the Investor Mel and Dave community. So what a great episode, Jay. Crushing it. Raising money is right up your alley. You're an expert at it. And if you like this episode, make sure to check out the next one. I'm Dave, and I'll see you there.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jconner.com/moneyguide. That's jconner.com/moneyguide. And download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jconner.com/moneyguide to get your free guide. We'll see you next time on Raising Private Money with Jay Conner.